Hello everyone. In today's video, I'll show you how to become a Roth IRA millionaire, tax-free, in a very easy way. What can be better than tax-free income? Because Roth IRA is the single best individual retirement account U.S. government ever created for U.S. tax-paying individuals. As long as you have earned income, you can contribute at any age. In fact, the younger you are, the easier to become a millionaire. And yes, with the help of compound interest. First, I will go over some basics about Roth IRA with you. Then, it will be the moment of truth. I will show you the exact dollar amount you can get when you only contribute the allowed contribution limit to Roth IRA on a yearly basis until you are age 65. The age groups I will demonstrate in today's video are 25, 30, 35, 40, 45, 50, 55, 60, and 65. I guarantee you that you will be very excited when you see your number. So, what is an IRA? IRA stands for Individual Retirement Account. What is a Roth IRA? It is the best type of individual retirement account U.S. government ever created for all tax-paying individuals in United States since 1997 by a former Delaware senator named William Roth. It allows you to put in after-tax money, meaning you cannot deduct amount from current year tax return. However, after that, all growth inside the Roth IRA, including capital gain, interests, dividends, are tax-free. Not only that, all future withdrawals are tax-free as well in most cases. I will mention it in details in the rules. So what are the Roth IRA rules? Rule number 1. There is no age limit for making contributions as long as you have earned income. Even a child with earned income can have a Roth IRA. However, the parents or the grandparents must be the custodian of the child's account until the child reached age 18 or 21 in most states. On the other hand, if someone chooses to work until over 80's birthday, they still can contribute to Roth IRA. Rule number 2. The contribution limit for 2020 is $6,000 for people under age 50 and $7,000 for age 50 or older. And you have a total of 15 months and a half to contribute, meaning from January 2020 until April 15, 2021. Rule number 3. Earned income limit for 2020 are $139,000 for singles and $206,000 for married couples. The IRA uses your modified adjusted gross income, or MAGI, or your adjusted gross income, or AGI, adds back certain deductions such as tuition, rental losses, student loan interests, passive income loss, other IRA contributions such as 401 contributions. Rule number 4. The total contribution amount to Roth IRA cannot exceed your total earned income of the year. Let's say your earned income is only $4,000 in 2020. Then you can only contribute up to $4,000. Rule number 5. An earned income is the income you generate either from working for someone or working for yourself. However, it does not include rental income or dividends and interests from your investments. It does include untaxed combat pay military differential pay, taxed alimony, and disability benefits. Rule number 6. You can withdraw contributions tax-free at any time for any reason from a Roth IRA. Rule number 7. All qualified distributions are tax-free and penalty-free. That's when you withdraw the growth portion of your Roth, including capital gains or dividends after age 59 and a half, and when the account is at least 5 years old. However, if you withdraw the gains before age 59 and a half, and if the gains are from the contributions that were made less than 5 years, then you must pay a 10% penalty plus income tax on the gains that you are withdrawing. Rule number 8. Roth IRA has no required minimum distribution, or RMD, when you reach to age 70 and a half. As you know, RMD is mandatory for all other IRAs, such as traditional IRA, SEP IRA, 401k, 403b, simple IRA. So you don't need to touch the money in your Roth IRA account if you don't need it. Rule number 9. If you inherit a Roth IRA and transferred assets to your inherited Roth IRA, you can also let the funds inside the Roth account to growth tax-free. However, unlike the original owner of the Roth IRA from whom you inherited from, you must take RMDs. But these RMDs can be withdrawn tax-free as well. The first RMD, though, must be taken on December 31st of the year that the original owner passed away. The inheritors can also choose a lump sum payout that is not subject to tax. Okay, now the wait is over. I will reveal to you how much money you will have at age 65 if you have contributed to Roth IRA to the full allowed amount and invested well over the years. Are you ready? Let's say you are 25, age 25, and then you started with nothing. All right, your monthly contribution, let's say $6,000 for a year. Let's say monthly about $500 you put in. So length of the time in years until you are 65 is 40 years. Estimated interest rate, let's say 15% plus minus 5. So from 10% to 20%. And then you compound your interest rate monthly. I would rather say weekly, but they don't have the choice here. So let's calculate. Voila! Wow! That much money. Let's see the table. Oh my God! At the year 40, which is at your age 65, at a 15% yield, you could have $15.5 million and $3.1 million if it's growing only 10%, and then it's at a 20%. Look at this! Almost $84 million. My goodness. All right, this case is when you're 30. And then you also start with nothing. Monthly contribution, same thing as 25-year-old, $500, because you want to put in full amount, $6,000 in a year. Length of the year you have is 35 years because you're 30 now. Interest rate, let's set all at the same, from 10% to 20% and compounded at monthly. Calculate. Voila! Look at that, $7.3 million. Let's see the table. When you are 65, the 30-year-old today, at a 10% growth, compounded interest, you will have almost $1.9 million. 15% growth yearly is $7.338 million. All right, look at the 20% growth, $31 million. My goodness. Okay, here comes a 35-year-old. All right, so you also started with nothing. Monthly contribution stays the same, $500. Length of invest is $30. Plus 35 is 65 years that you're gonna be retiring. Same amount interest rate. All right, compounded monthly. Calculate. Wow, $3.4 million. Look at that. You're gonna have $1.1 million if it grows at 10% per year, and $3.5 million if it grows at 15%, and $11.5 million if it grows at 20% per year. Congratulations. Now comes a 40-year-old. All right, you also started with nothing. You should have, but you started with nothing. Starting $500 per month for $6,000 total until you're 65. Length of investing 25 years. Same interest rate and compounded monthly. Calculate. Wow, still $1.6 million if you start at 40. My goodness. All right, so at 10% rate, your total will be $663,000 something dollars, and $1.6 million if it grows at 15%, and $4.2 million when it grows at 20% in your account. Great job. Okay, now comes a 45-year-old. Let's say you're being smart. You have been stashed away some dollars in your Roth anyways over the years. So you have $10,000 starting amount, all right? And then you continuously adding $500 per month for the entire time until you're 65. Length of time, this time you have 20 years because you're 45 already. Interest rate plus minus 5, still the same. And monthly compound. Calculate. Wow, still great. Look at that. Okay, if you're 45 years old today, all right, at 10% growth rate, at the time of your retirement, 65, you will have $452,965 in your account, almost close to $1 million if it's growing at 15%, and then $2 million when it grows at 20% in your account. Very nice. All right, here's a 50 years old individual. All right, he also has been smart and stashed away about $20,000 in the Roth. Let's assume. All right, so because he is 50, so he allowed to put in $7,000 per year instead of only $6,000 per year. So divided by 12 is approximately $583 he can put in per month. Length of investing is 15 years because he's already 50. So the interest rate or dividend rate the total growth of the performance of the portfolio still stay the same. All right, 10% to 20%, and monthly compound. Calculate. Wow, still not bad, right? At 50, if the account grows at 10%, it's $330,000, and $576,866 grows at 15%. If it's 20%, still he can generate $1 million. Nice job. So here comes a 55-year-old, all right? And then he also been stashed away something in his Roth from all those years working. So let's say he has $50,000 in the Roth account, And he also can put in $7,000 per year, which is $583 per month. Length of time in years is 10 more years until he is 65. All right. Interest rate or dividend rate, we still set at the same. Compounding monthly and calculating. Okay. Still not too bad. I'll show you later my example. At a 10%, he'll get a $255,000, 15%, $382,000, and 20% growth, $582,000. Not too bad at all. So now this is for a 60-year-old man. All right, he's been very smart, stashed away around $80,000 over the years in the Roth. All right, so he can also contribute $7,000 per year, which is $583 per month. Length of the time in years is not in his favor. It's only 5 more years. And then the interest rate or the account growth, let's say the performance of the account, which including the interest rate, all right, it's from 10% to 20%, 10, 15, 20%, compounding monthly. All right, calculate. So for this 60-year-old person, only 5 years in the timeline to invest. At a 10% rate is $176,000-ish, 15% rate is $220,000-ish, and 20% rate is $275,000%. Not too good, but not too bad either. This case is for a 65-year-old man. Initial investment, let's say he's been very good working all his life. He putting money in the Roth, and then he currently has $120,000. But he think it's not enough for him to live until 90-year-old. For example, he has very good gene in his family. So he decided to work another 5 years, work until he's 70. So he still can contribute. Because Roth has no age limit, he can still contribute to the highest amount. So $7,000 per year, which is $583 per month. So length of time in years he can grow this account is also only 5 more years. All right. Estimated interest rate, or the account growth, let's stay the same. And monthly compounding and calculating to show the table. At age 70, this old man, if the account grow at 10% per year, he will have $272,000. At 15% per year, he could have $304,500 in his account, and 20% rate is $382,841 in his account. Not too bad at all. Now is something I want you to see. It's even more interesting. All right. Remember that 65-year-old man at the end of 5 years investing at his age 70, he has, if it grow at 15%, he has total of $304,500 roughly in his account. All right. So at that time, he is not putting any contributions because he stopped working. All right. Instead, he's taking out money. He wants to live on his investment. Let's say he's taking out about $2,500 per month. All right. So $2,500 a month times 12 months is $30,000 a year, which is about 9.85% of his total investment rate. All right. It's a lot more than the 4% rule. But look at this. All right, so because he's not dying yet, all right, his account still growing at the same rate that we assigned to. All right, so length of time in years, this time, let's assume he can live another 15 years, which is 70 plus 15, which is until he is 85. All right, so he has another 15 years account can growth. Instead of putting money, he's taking out of money. And then the account still compounding monthly. Let's see how much money he has when he is 85 years old. I'm gonna blow your mind. Look at this. All right, so at a 10% growth rate, he could still have $320,000 in his account and $1.1 million at 15% growth and $3.1 million at 20% growth. It's a very, very great gift he can pass on to the next generation, which his heirs can grow the account still tax-free for as long as they live. All right, so that's the beauty of compound interest. All right, so no matter when you start to grow your account, the account grow until you die, not until the day you retire. That's something for you to remember. All right? Remember the 60-year-old I mentioned earlier? He only had 5 years in the Roth IRA investment until age 65, and he doesn't want to work a day over 65. So what his account doesn't look good, but still I'm gonna show you the end result, gonna surprise you. All right, if you remember, at a 15% growth rate, his account at age 65 is about $220,000 to $13 in his account. All right, so instead of contributing anything more because he stopped working, he has no earned income, the old man want to take out $2,000 a month. All right, $2,000 a month times 12 months is $24,000 a month, a year, I'm sorry. All right, it's about 10.9% of his current investment total amount, which is way above 4% rule. I'm showing you this on purpose. Let's say he gonna also live until age 85, which he has another 25 years to go with the same performance rate in his account and monthly compound interest. Let's look at the end result. You're gonna be surprised. Calculate. Voila, show the table. When he is 85 years old, amazingly, if it's at 10% growth rate, his account still have $1,429. If it's at 15% growth rate, he will give his next generation, grandson, son, daughter, whatever, $2.67 million in inheritance money and $14 million. Wow! If it's at a 20% growth rate in his account. Amazing. The man grew his account only $220,000 at retirement age. He looks a little bit miserable. Look at the end result. All right, ladies and gentlemen, start investing, start dreaming, start to become a millionaire. Don't even wait one more day in your life. Thank you. In summary, Roth IRA is the best retirement investing vehicle for you to become tax-free millionaire. But how can you get those returns that I have just shown you? The simplest thing is to use a robo-advisor at M1 Finance. All you need to do is to select a few pre-made free portfolios, or simply select VTI or VOO or SPY ETF that is mirroring S&P 500 performance in the market. Then add BND, the Vanguard Total Bond Market, to offset the market downturn. Then you will be on your way to become a millionaire. So please subscribe, hit the notification bell, like and comment. That will help to grow my channel, and you will not miss any future video about personal finance. Good luck everyone. Thank you.